podcast is brought to you by Daba, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the Daba app on your favorite Google and Apple app stores. The BRVM sent a strong and encouraging signal between January 12th and January 16th. The equity market moved clearly higher, driven by renewed investor confidence, spectacular performances from several leading stocks, and trading activity that favored quality over quantity. For investors, this is exactly the type of market setup we like to see at the beginning of the year. Let us start with the big picture. Over the week, the BRVM equity market closed firmly in positive territory. The BRVM Composite Index rose by 2.63% to reach 350.94 points. The BRVM 30 Index also moved higher, rising by nearly 2% to close at 167.13 points. The same trend was observed for the BRVM Prestige Index, which ended the week at 144.05 points, up by more than 1%. Why does this matter for you as an investor? These three indexes represent the core of the regional market. When they all move higher at the same time, it means the rally is not limited to a single stock or sector. It is a sign of a healthy market, where a broad base of investors is returning to buying with a medium to long-term mindset. Another key element to understand this week is the structure of market activity. Trading volumes declined slightly, falling to approximately 1,963,901 shares exchanged during the week. However, the total value of transactions increased sharply, exceeding 4 billion francs CFA. In practical terms, this means investors focused more on higher quality stocks, often with higher unit prices, rather than multiplying small speculative trades. It is similar to shopping at a market. You buy fewer items, but you choose better quality. In financial markets, this behavior often signals a shift toward more disciplined and selective portfolios. In this context, a few stocks concentrated a significant share of trading activity. Nestlé Côte d'Ivoire emerged as the most actively traded stock of the week, with more than 768.6 million francs CFA in value traded, while its share price also rose. Sonatel Senegal and Orange Côte d'Ivoire recorded solid trading volumes as well, confirming their status as reference stocks in the regional market. For investors, these stocks often play the role of a portfolio foundation. They provide stability, liquidity, and visibility on dividend flows. When they perform well, they help support the broader market. Now let us turn to the most striking equity performances of the week. This is where the market really stood out. The strongest performance of the week came from Unilever Côte d'Ivoire. Over the period, the stock rose by more than 32% to close at 46.45 francs CFA. This type of move over just a few sessions is never insignificant. It reflects a sharp return of investor interest in the food and beverage sector, as well as a rapid revaluation following a phase of caution. For investors, this is a powerful reminder of a key rule. Large defensive companies can sometimes appear calm or even boring, but when the market repositions itself, they can quickly become major performance drivers. The second best performance of the week was recorded by Sonico Metal Packaging SAIM. The stock climbed by more than 23% to close at 1,310 francs CFA. This move is particularly interesting to analyze. It follows the stock's readmission to the market after a sanction imposed last year. In simple terms, the market sent a clear message: confidence is returning. It is like a company returning to the field after a suspension. Investors observe cautiously at first, test the waters, and then re-enter once the rules of the game are clear. The third notable performance of the week came from Setao Côte d'Ivoire. The stock rose by nearly 14% to close around 1,275 francs CFA. Once again, this highlights growing interest in construction and public works-related companies, a sector often linked to public and private investment in infrastructure. For investors, these sector moves provide valuable signals about current market themes. Consumption, industrial packaging, and infrastructure remain key pillars of the real economy. Of course, not every stock moved higher. A few names posted moderate declines. Burnabe Côte d'Ivoire edged lower by just over 2%, mainly due to profit-taking after a rapid rise in previous weeks. Servair Abidjan, Côte d'Ivoire, and SAPH Côte d'Ivoire also experienced modest pullbacks. These declines are not necessarily negative. They often represent a healthy pause in the market. When investors take profits, it can create more attractive entry points for the next phase. Overall, the message from the equity market is clear. During the week, 34 stocks advanced while only 10 declined. The market was clearly biased toward buying. Let us now turn to the bond market, which offers a complementary and very important perspective, especially for more cautious investors or those seeking regular income. Over the week, bond market capitalization edged slightly lower, declining by less than 1% to approximately 11,168 billion francs CFA. The most striking development, however, was the sharp slowdown in trading activity. The total value of bond transactions fell to around 442 million francs CFA, compared with nearly 4.9 billion francs CFA the previous week. What does this mean for you? Simply put, bond investors adopted a wait-and-see stance. As equity markets gained momentum, some investors temporarily adjusted their allocations, waiting for clearer opportunities in fixed income. Despite this slowdown, two sovereign bonds captured most of the trading activity. These were an Ivorian government bond with a 6% coupon and a 10-year maturity, and another with a 5.9% coupon and a 15-year maturity. Each bond recorded approximately 200 million francs CFA in trading value, together accounting for more than 80% of total bond market transactions. This confirms an essential point. Investors continue to favor sovereign bonds, particularly those offering a balance between attractive yields and intermediate maturities. In a well-diversified portfolio, these instruments act as stabilizers, especially during periods of potential equity market volatility. If we step back, the week from January 12 to January 16 delivers a consistent message. Investors are gradually returning to equities. Without abandoning prudence, they are being more selective, making smarter arbitrage decisions, and focusing on the most transparent and resilient assets. Now, let us look ahead. The coming week looks promising. Available data suggests a market that remains attentive to opportunities, with several technical and fundamental setups that deserve close analysis. Some sectors remain well-positioned, while others are beginning to offer more attractive entry points after periods of consolidation. These opportunities exist, but they are not always obvious at first glance. They require careful analysis, selection, and timing. That is precisely where guidance makes the difference. For those who want to go further, understand where to position themselves, and build a coherent long-term portfolio, Daba Pro is the right tool. Each week, subscribers gain access to in-depth analysis, structured recommendations, and a clear reading of market trends. With Daba Pro, you do not simply react to the markets, you stay ahead of them. That's all for today's episode. Thanks for listening to the Daba Markets Talk podcast. We'll be back next week with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the Daba app on your app store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.